Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is December 5th, 2018. Tonight we're going to take a look at gold here. Down here at the bottom, the ETF is GLD. Got the trends all pointing to the upside, we've got the technicals pointing to the upside, and we've got a little alert here, which is a tight support resistance level. And that's something that we're going to talk about a little bit here. And if we take a look at the weeklies coming down here to gold, we also see that we have a lazy week, which has gone on for 10 days, or 10 weeks. So let me explain what that represents. Basically, what we're looking at is a sideways consolidation here, where the daily bars, which is what these are, have been moving sideways. We've got that tight support resistance level. Well, this is kind of the spot that we're looking at. We're up against this resistance right here, and that number is at 1249 basically. Call it 1250 just to round it. If we can break above that, then we've got a nice little surge that could take place, because the next level of resistance is way over here, which is at 1271. There's other levels in between, but it's for the most part clear sailing for at least 10 points. If we take a look at the weekly bars, you can see it a little more distinct right through here. This is the resistance at 1250, and you can see down through here that we've got some support, and that's where this this tight consolidation is coming from. So we're at the upper end of that tight consolidation. Now there's enough strength to the market if we actually pull up the targets here. Right here is the 1250. We have a strength of 150, and we have a C, which is count of 4. And what that means is that when we look at support and resistance levels on the different time frames that we look at, which is 120-minute bars, we've got daily bars, we got weekly bars, and what we're looking for is different levels of support and resistance across those different time frames. We sum them up, and then we're able to come up with a strength, which is what the S stands for, of 150 and a count of 4. And what I'm pointing out here is that there really isn't a lot of resistance to the market should we break above there, and we're now basically at that level right now. So if we're able to break above, then we could very easily see it as far as the next level, which is just a strength of 28, pretty weak, and a count of 1. A strength of 64, count of 2. So you can see that there are levels that are stronger of resistance, but between this 1250 and 1261 level, there's really a lot of nothing, which bodes well for our long position that we actually have here in gold. We only have the one daily system, which has just established itself, but I'm sure that if we're able to break above that level, the levels that we're running into that resistance at, that we could have more systems start to trigger here. So we'll see how things kind of play out. On a longer term basis, the depth gauge, it has been in a downward trend. We've based, and now we're starting to head a little bit higher here. So we've got longer term strength to the market's longer term trend to the market pointing to the upside, and with that breakout, again these are weekly bars, we could see the market really start to ratchet up. But it's a big if. Can we break above this level we're looking at there? And if we take a look at the daily bars, the same thing. That's what we're up against right now. What we'd like to see as to whether or not the market's able to break above there. I'll point out, this is minor, but that the 50-day moving average, this yellow line, has been pointed higher, which is a good sign. You got the 200-day, which is headed lower. So if we're able to break above this, the logical spot that we're going to intersect with, both in that 1261 level that I gave you, but also the 1275, which is a changing number given that the fact that the 200-day moving average has been moving to the downside slowly as it is. But I'd say that there's going to be an intersection here fairly soon if we're able to break above that that particular level. So on the daily bar basis, looking at 1249.10, but looking at that other number that I gave to you where we're looking at the weeklies, the dailies, and the 120 minutes all combined together, the number is most likely going to be 1250. So we're getting up there, and we're going to see us whether or not the market's able to break above or it's going to be repelled back to the downside. So we'll see how things kind of play out here with our systems. We only have the one system right now, but and that is a trend-based system, which bodes well for the fact that the market is showing signs of a trend. And if we can just get this thing to sort of pick up a little bit of steam, then all will work well. If we're able to repel at that level, I would suspect that we're going to liquidate that position fairly soon. So watch gold. Let's see how things work at the 1250-ish level, and we'll check back with that down the road as well. So with that, thanks for watching, and we'll take a look at some more markets soon enough.